Yes. Thank you. Yeah, it's not often in my life that, technical accounting topics are the popular thing that people want to talk about. So this is like dream come true for me, right? Like this is maybe the first time in my life I could pretend to be cool.
Yeah.
So yeah, let's do it. We've got some great folks from Deloitte here. Do we have everybody? I'm looking for Sherry and Connor here. Hey, Sherry, what's up?
Hi,
How we
Joe.
doing?
Pretty good. How are you?
Great, 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 great. So I'm sure Connor will be joining us momentarily. So we are here. We're talking technical accounting. We're talking as we have a bunch in the last, really all day through a bunch of these sessions, new regulations and what the impact is on our space. So we're going to focus on two things here. We're going to do some kind of gap accounting stuff, and we're going to do some tax stuff. So on the gap accounting side, we're going to talk fair value, new FASB rules, everything that's involved there and what it means for all of us. And then we're going to talk tax and new 1099 requirements for brokers. We'll get into all that. So first, I want to introduce the panelists here. So we have Sherry Wren with us from Deloitte. Sherry, do you mind introducing yourself to folks? Let them know, what do you do at Deloitte, and how do you find yourself in the digital asset space?
Yeah, of course. So as Joe mentioned, my name is Sherry Wren. I'm a senior manager with Deloitte's audit and assurance practice, sitting in Seattle here. I don't know if there are any West Coast audience there. I spent a few years in our Deloitte's National Office Accounting and Reporting Services group, specifically focusing on digital asset. So during my time at the National Office, I helped with various complex accounting questions related to crypto accounting, helped issue publications on accounting guidance related to crypto, and also followed very closely with the FASB project on accounting and disclosure of crypto assets that I know we're going to talk about shortly.
Awesome. So Sherry, you are obviously the right person to have here. And we got Conor O'Brien with us also at Deloitte, who he's going to help us dig into some new tax reg stuff coming up here. Conor, do you mind introducing yourself? Let everybody know what you do at Deloitte and how you got into the digital asset space.
Yeah, of course. Thanks, Joe. So, hey, everyone. My name is Conor O'Brien. I'm a senior manager currently sitting in our Washington National Tax Office. Actually, I live in LA, but work out to DC, so quite a commute. I actually am a boomerang. I came back to Deloitte 6 years ago to work specifically in blockchain and digital assets. I have a sincere personal interest in the space. I get my hands dirty. I do a lot of on-chain transactions on my own accord, and it's just really fun being able to merge the two. So happy to be here.
That's awesome. I think that's been a common theme we've heard through the day. I think the folks that have a personal interest or they're personally involved, I think tend to flourish on the like business accounting finance side of things. I think because the space can be complicated, it can be different. It almost requires that personal passion, I think, to be willing to dive down the rabbit holes and really get a great understanding. So I'm not surprised to hear that at all from you, Conor. So, okay, Conor, we're putting you on ice for a minute. Let's talk to Sherry, because I want to start out talking fair value accounting, but really I want to take a step back. We at Bitwave, we've been following the FASB project, right? Doing the same thing kind of you talked about, Sherry. But a lot of folks in our audience, they might not be as familiar of like, what is the FASB? Maybe they see a lot of stuff in the news about the SEC, regulation, lawsuits, all that kind of stuff. So would you mind starting, we'll start high level here with what is the FASB? Is that the same as the SEC? Is it part of that? How are they related in any way? Do you mind kind of just giving us like the landscape of the parties involved here, Sherry?
Yeah, sure, of course. So FASB stands for the Financial Accounting Standard Board. So they're a standard setter. So they set up standard on GAAP and basically the accounting rules that we use, right, in the US. And so as standard setter, a key thing is they can't really enforce anything. So they just come up with a standard. They say, hey, you can use it. But, if anybody who doesn't apply it, they can't do anything about it. And the enforcing role would come down to regulator, which is what SEC is, at least one of them. SEC is the Security Exchange Commission. So they're a regulator for the public companies. They have the authority to set and enforce standards specifically for public companies. Although for the most part, they have been leveraging the standard from FASB, aka the US GAAP, they could, require US companies to file financial statement based on US GAAP, and they could, require foreign private issuer to use IFRS. That's kind of, their terrain. And in addition, they could also set additional standards or interpretive guidance in terms of, how things should be accounted and reported. So, when they believe there is a lack of standard, they can also, urge the FASB to come out with more standards so that people can follow. So I hope that is a little bit more clear.
Yeah, that's really right. So okay, so SEC is the enforcer. They could make their own rules, but for the time being, and traditionally, they've relied on the FASB and gone with those GAAP rules. But they could, require something else or something additional. That's really good to know. So it makes sense then that we've been following this FASB. Folks typically like to stay out of the crosshairs of the SEC. So it makes sense that so many folks like us have been following that FASB project. And so, we understand here there's been, proposed new guidance here. We've heard some about fair value accounting, but Sherry, would you mind explaining what's in that proposed standard update? You can feel free, obviously, to touch on the fair value stuff, but is there anything else in there as well that maybe isn't talked about as much that you think folks really want to keep their eye on?
Yeah, of course. So the FASB proposed the accounting standard update on certain crypto assets back in March this year, after a series of board meetings. And recently they held another one to go over the public comments received and decided to move forward with this proposal. So that's why you hear that we should hopefully see the final rule or the final standard soon. So after this last meeting and a few tweaks and the proposal, I can break down, the main parts of it real quick here. First of all, we want to acknowledge that this update does not apply to all cryptos. This proposal lists out 6 criteria, and only cryptos meeting all 6 are in scope for this update. Some key cryptos that are excluded are wrap tokens and NFTs, or non-fungible tokens, and also cryptos issued by the reporting entity or its related party. So I know that's not exactly the answer it's looked for by many. We've seen that in the comments. But standard setting takes a long time, and in order to move this project at a fast pace, which it really has been, just over a year, considering it was just added to the agenda last year in May, and now we already are looking to have a final standard very soon. It's really incredible pace compared to some of the other projects, and expanding the scope here would really slow down the project, and that's why it has been intentionally been a narrow scope so far. And after talking about the scope, we can talk about the key changes on measurement from the proposal, which is what people care about most, obviously. So the proposal would require entity to subsequently measure crypto assets in scope of the proposal at fair value, with changes in fair value included in net income. This is a huge change. As we know, for now, most cryptos are accounted for as intangible assets unless the companies are applying some industry-specific guidance. And based on intangible asset guidance, the cryptos are held at historical cost, subject to impairment, which resulted in basically all cryptos held are recorded at the lowest value because there are only a requirement for impairment, but no guidance to write up the value when the prices go up. And because crypto prices change so much and have frequent ups and downs, as we all know, only the downs are being captured. And now with the proposed guidance, the crypto assets in scope can be recorded at fair value, which more reflects their market value now versus just the historical cost less impairment, right? And at the lowest price. And so this is obviously the biggest change, and this is huge because, with the new accounting, it will be much easier to reflect the economics of those holdings, and companies don't need to try to, figure out the lowest price anymore, which can really be, at any particular point in a particular day. So I know it's been a hassle for many companies to do that.
Yeah, for sure. And I think in the crypto space, I don't think a lot of folks make a habit of really patting regulators on the back, but I will say, the pain of impairment, and only ever getting to write your assets down is something, we hear so much about from our customers. So the ability to at least, adjust to fair value does feel like, some real relief, maybe some sanity in this process here. So that's definitely exciting, I think, for a lot of folks listening in here. I want to, there's a lot of information out there about fair value accounting. And honestly, that's the first thing, our customers come to us and say. They say, hey, I'm seeing the new rules coming. What's Bitwave going to do for fair value accounting purposes? And we tell them, hey, don't worry. We've already updated the software. We've been working on this. We're going to be able to support it. But what I don't hear as much about is maybe some of the reporting requirements, because there's also reporting requirements in the, proposed in the new standard. So Sherry, wondering if you can talk about that, because it's not just about marking your assets to fair value now. There's some other information that folks are likely going to have to disclose. Is that right?
Yeah, absolutely. Some other changes to reporting of cryptos in scope of this proposal include, proposals on presentations, for example. Cryptos subject to this proposal need to be presented separately from other intangibles. So now it needs to be its own line. And the change in fair value should be presented separately on the income statement as well, from things like impairment and amortization, related to the other intangibles. And then also for cash receipt from nearly immediate sale of crypto assets received as non-cash consideration for goods and services provided to a customer. I know it's a handful, but basically a good example would be, miners. If you get Bitcoin as reward for providing mining services, those would, and you sell those cryptos right away, right? And those, the cash received would be classified as operating activity versus, currently companies might be classifying it as investing activity based on current GAAP. And then on disclosure side, there are requirements as well. For example, there is a requirement to have a significant holdings table at interim and annual period that includes a lot of information, name, cost basis, fair value, and number of units for each significant holding. And if there are no significant holding, but a lot of insignificant ones that aggregate to be significant, then there needs to be aggregated disclosure for that as well. And that is one definitely, everybody on the board likes that disclosure, and seems like investor or people who comment really welcome that one as well. So that's going to be a big one. And then if cryptos are subject to contractual sales restriction, then companies need to disclose about that restriction as well, which makes sense. And then lastly, annually, there is a requirement to have a reconciliation of activities that include like purchases, sales, gain and loss for the activities, just to name a few. So definitely there are a lot more requirements than just the measurement, for sure. Also, you talked about valuation. I can comment on that one as well. That for the fair value accounting, it just means companies need to get fair value of the crypto assets under ASC 820, which is the same fair value guidance for basically everything. However, I don't think that's necessarily going to change the process a lot, as a lot of companies are already reporting fair value voluntarily, since they don't want to show only historical costs, less impairment, which is typically a number much lower than the fair value, as we mentioned. In addition, to figure out the lowest value, companies need to have a lot of the market data anyways. So again, don't think that's going to require much additional data on that front. That said, again, following the guidance and determining the principal market, which is based on highest trading volume for each representative asset. So which means that, for different cryptos, companies could have different principal market, and different companies would have different principal market. And it could change over time. Your principal market now might not be the same a year later, companies need to be cautious of identifying a pricing that's representative of orderly transactions. So just want to call out that part real quick.
Yeah, totally. By the way, poll question for those following along and trying to earn some CP here. There's a poll question up. Yeah. So, wow. So, right. You touched on principal market. You can have multiple principal markets, maybe different for different assets. Maybe it's changing, right? That's not going to be consistent across companies, potentially, based on the markets they have access to. And you mentioned at the top, there's a bunch of assets that are scoped out of this, right? So we are going to be living in a world, pretty clearly where certain assets get certain treatments and other assets get, the idea that crypto is all one thing, as far as a reporting standpoint is definitely gone. That sounds to me like it could be tough, right? Like, if I have the tokens my company issued, I have to treat this way. The tokens we purchased, we have to treat this other way. Definitely seems like there will be some challenges in compliance. Are there any specific challenges you think in compliance or strategies or things that you kind of think about, for your clients here that you think about that people should have on their radar? Like, how do we go about making sure that, we're in compliance and we're doing the right things here?
Yeah, for sure. As you mentioned, there's some limitation with the scope of this project, right? So companies who hold material amount of wrap tokens and NFTs, and then, or if they're the issuer of the token, or just for any other reason that their crypto don't meet the scope, then they will have to follow the old model to account for those cryptos. So totally to your point, they might need to carefully identify which ones fall in the scope, which ones don't. And also, the board did not address initial measurement or derecognition. So companies still need to look to other guidance to figure that piece out, which sometimes could be a little complicated. And also, for companies who hold rare cryptos that don't have an active market or have really low trading volume, that they could potentially need level 3 inputs to come up with fair value. It might be a challenge, to come up with that. And also, if companies have crypto to crypto transaction, it might be challenging as well from accounting perspective to navigate that, and also just tracking the gain and loss for crypto by crypto for the reconciliation purpose, for that disclosure purpose. There could be some challenges as well. But again, the objective of this project really is to provide more decision useful information to investors. So that's why it's not really just for so you can use fair value, it's easy for the companies, right. But a lot of time it's also to provide investors with decision useful information. So that's why there's some challenges, but also opportunities for the companies, especially now with being able to account for those cryptos at fair value. They're definitely will be able to tell their stories better, right? What the economics behind holding the cryptos in the transactions, instead of just recording at the lowest value of those cryptos, right? And then also, some company, especially public companies, sometimes they want to disclose their fair value already, then they risk, being called out as non-GAAP measures by the SECs that are not appropriate, right? So now it's definitely, at least good in that sense to tell the true story.
Totally. I think this will be one of those standards we see folks maybe rushing to adopt. All right, great stuff, Sherry. So okay, a lot of stuff on the FASB, on the GAAP side of things. Let's talk some tax stuff, because we're double dipping here. We've got proposed new regulations from the Department of Treasury, from an IRS standpoint, and specifically here, I want to talk about the impact for broker rules as it relates to 1099 reporting. Conor, would you mind kind of filling folks in on what are the proposed new IRS regulations? How does it impact brokers, and what reporting they might have to do from a 1099 standpoint?
Yeah. So I think, probably one of the most interesting things about these regs is really how expansive the definition of a digital asset broker is. I think if you think about, traditional securities brokers. It's pretty easy to visualize a securities broker and, looking at like a centralized digital asset exchange and saying, okay, that looks close enough to a securities broker. I'd imagine that they would be in scope. But, the regs included, what they're really aiming at is trying to identify anybody that is helping facilitate a sale or exchange of digital assets and either is or could be in the position to know who the transacting parties are. So that really, broadens out this net of who a broker is for these purposes. And we see that with, their comments on hosted and unhosted wallets as potentially falling into this category if they're offering certain services or activities on their platform. Also, interestingly, the expansion or the potential application to decentralized exchanges. So there's a lot of new types of parties that are in the mix for being a broker. And I think the other interesting to think about specifically for on-chain transactions and parties that are using a hot wallet to access a decentralized exchange, the potential for duplicative reporting here in this space. And that would be two parties reporting on the same transaction, right? If I'm entering this transaction through a wallet that's actually giving me the rails to the decentralized exchange, I think there's a question there of, all right, well, whose obligation is it to report that transaction, and is it going to be picked up twice? Now, the interesting thing is there are phases as these reporting obligations roll in on the 1099 DA. So that's, the first phase is really gross proceeds reporting, as opposed to, also having to report the cost basis of the assets used in a transaction. So that will be, incorporated into phases. There is a lot of information that's currently contemplated as being required on the 1099 DA, and some that I would expect to see some industry pushback or comments and comment letters to the IRS, such as requiring transaction or addresses subject to transactions. I think, some parties may view that as kind of unfavorable or unfair to provide the government. But yeah, it's a new paradigm for a new industry. So
yeah. So it sounds like there's going to be a lot of entities that may not have considered themselves brokers in the past that end up falling under the scope of this here, right? And actually, that's a great takeaway of, the proposal, starting with proceeds, because I've heard, I've read a bunch of stuff about, duplicative reporting. What if the reporting entity is using a different methodology to determine cost basis than what the taxpayer is using, right? So there's potentially a lot of there's potentially some mess there, right? So I'm sure we will see a lot of comment letters, just like you said. Let's drill into a couple specific types of industries. You mentioned decentralized exchanges. What about, we have a lot of miners that use Bitwave that might be in the audience here. And we have a lot of, crypto native entities that are using decentralized exchanges a lot. Anything specific in those two groups that you want to call out from a reporting standpoint here?
Yeah, definitely. So, the 6045 regs they're focused on sales or exchanges of assets. And there's a specific exception in the regs, the proposed regs, for miners and validators that are only providing, validation services of transactions that are occurring on a blockchain. That being said, we aren't certain where the government will go with some of these constructs. If you think of, a proof of stake blockchain and one that has the ability for token owners to simply delegate their tokens to a validator, is that reward that the staker that isn't operating the hardware or anything receiving, is that reportable? It's not reportable under 6045 because it's not a sale or exchange. But is the IRS going to come out in the future and have some, regulation or requirement, probably under section 6041 of, hey, you need to report that staking reward that the staker earned, right? And who's going to be obligated to report that? Maybe they would point to the validator. Like, obviously they have not commented on that yet, but, just to call out, just because some of these things aren't included in 6045, there may be other reporting requirements that are coming down the path. Now, on decentralized exchanges, I think there was a lot of interesting stuff that was said in the preamble here. really about identifying who might have an obligation to report for decentralized exchanges. I know in earlier discussion language that the IRS had released, there was this concept of people facilitating a sale or exchange for consideration. That changed from for consideration to as part of their trader business. And you know, the way that my mind thinks, if you think about a decentralized exchange, just like your common AMM, right? It's going to be the liquidity providers that are actually the ones that might be receiving consideration in those transactions. Now, the preamble here is really pointing to other parties, and they're really trying to look at control of that decentralized exchange, and not even like within a specific smart contract, but really on kind of a larger scale, right? Who has the ability to update the smart contract if it's not an immutable smart contract? Or who will be, you know, making decisions of how the platform in general progresses over time with new versions, right? And they even called out governance token holders and DAOs. I know, you know, a lot of people like to say that a DAO is a nothing nowhere, but obviously the IRS is thinking differently about some of these things. So.
Totally. Wow. So, I mean, a couple super important takeaways there while we have our second poll question up here for the audience. You know, one, what I'm hearing from you, this is an evolving situation, right? A lot of this stuff is still unknown. You know, these are proposed guidelines, and you know, seems like an important one to track here as this develops. You know, we got like 2 minutes here, so I want to close to reiterate a great announcement we had, and I'll tie it into the conversation here, which is, you know, if you have questions about what we're talking about here, these folks from Deloitte are great people to call, of course, right? You know, you can't have folks more in the weeds from a deep understanding standpoint here than the folks at Deloitte. And I say that because, you know, this week, I think it was maybe a couple of days ago, we had a super exciting announcement here at Bitwave. We announced a partnership with Deloitte, and you know, I can speak from experience here of, you know, a lot of, I don't want to say this, I think in the industry, it's fun to announce partnerships, whether they're really material or not. But, you know, I've had the opportunity to work with folks from Deloitte on joint clients, solving real problems, whether that's getting data, you know, making sure, you know, Bitwave is capturing the correct data to facilitate the technical accounting guidance provided by Deloitte, right? There's all of these areas where I think Deloitte and Bitwave kind of, you know, work together, and so this partnership for us is super exciting, and I think there's really a ton of benefits from it, you know, whether it's automated software workflows to increase efficiency, or, you know, on-demand access to, you know, accounting and tax subject matter experts like the folks we have here. You know, if anyone here is interested in, you know, maybe needs some technical guidance on the accounting side, or is just wondering how maybe Deloitte and Bitwave might be able to help them out, I encourage everybody to go to bitwave.io/Deloitte. I'm sure someone who isn't me will throw a link in the chat here so everybody could go to it. But it's super exciting stuff. They are truly top tier folks that know their stuff here. I can't recommend it enough. So Sherry, Conor, thank you so much. I know that we could go so much deeper here. Thank you for giving the audience a taste of your knowledge here. Really appreciate it.
Yeah, thank you for having us.
Thank you, Joe. Yeah, pleasure.